Hi, welcome to EQD Research Global Insights for Tuesday, March 16th. Today, we're going to check in on tech stocks in Asia, noting the Hang Seng Tech Index is establishing a new uptrend. European volatility is crushing, but maybe not for long. And VIX dipped below 20. We'll see if it's going to stay there for more than a brief pit stop. But before getting started, we're a few weeks into producing this show twice a week and are happy to see it gaining viewers and traffic. You can easily help by hitting the like button below and subscribing to our channel so you know when these short videos are going live. So starting out in Asia, technology stock weakness. It is not isolated to just the United States, where the NASDAQ 100 trails the S&P 500. NASDAQ 100 is up 3% year to date. S&P 500 is up around 6% year to date. In Hong Kong, the Hang Seng Tech Index, which had a great 2020, is up 1.25% so far this year, while the Hang Seng Index, the old school Hang Seng Index, has gained 6.6%. Despite this relative underperformance, there's a ray of hope for the Hang Seng Tech Index. Last week, we did note that the Tech Index bounced off the 200-day moving average at just over 7,700. Since that time, it has been range-bound between 8,200 and 8,900, appears to be trying to establish a new uptrend. Now, at least one trader expects this to happen. As on Tuesday, there was a trader that initiated a bull put spread using the March 30th Hang Seng Tech Index options. Now, with the Tech Index at 8,480, a trader came in and sold in a few lots the 8,400 puts and purchased the 8,000 puts. They did these at credits between 174 and 178. We're going to say the risk to this trade's around 225 points, but we would need to see a drop below 8,000 over the balance of the month. Also last week, as the tech index rebounded, there was a similar trade using the 7,700 and 8,300 puts. Over the next couple of weeks, we're definitely going to be keeping an eye on the 8,300 and 8,400 price levels for the Hang Seng Tech Index, at least through the end of the month, to see how these trades work out. Turning to Europe, the VSTOXX 50 up over 0.5% today, and VSTOXX dropped accordingly, down over a point to 1748. VSTOXX broke through the 20 barrier last Wednesday and has closed each day in the teens, moving progressively lower over the course of each day. Down, 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 down. VSTOXX curve, it's steep with the April at a 4-point premium to spot. April will become the front month tomorrow. March has been pretty close to spot over the past couple of weeks. There might be a lesson to learn there that with March at right in line with the spot, maybe it was anticipating a move to the teens. However, with April at such a premium, this may indicate a visit to the teens is not permanent, although we should account for this being a 5-week expiration cycle for VSTOXX, with April contracts expiring on the 21st. Now, at least one trader today is looking for a return to the high 20s. They put on a call butterfly using the April options. They did this in a couple of lots, but in each lot, they bought 1,000 of the April 24 calls, sold 2,000 of the April 36 calls, and bought 1,000 of the April 48 calls. Net cost for each butterfly, 47.5 cents. The break-even level is 24, spot 475, and then at the upside, just under 48 if held to April expiration. Then finally, in the US, the S&P 500 was slightly up this morning. VIX down 33 cents to 1970. Now we have had VIX under 20 for an hour or two. We'll see if that holds. March is at a slight premium to spot VIX, although it does expire on the open tomorrow. April's at a big premium, just like what we saw with VSTOXX. Maybe that we're braced for higher levels, but also, again, let's take into account that, like VSTOXX, this is a 5-week expiration cycle for VIX options and futures. Now, on the trading front, 2 trades worth noting. First, kind of a small trade, but I like the time that it was done. Early today at 5:30 a.m., as my alarm went off, somebody bought 3,000 of the March 20 puts for 40 cents each. Not sure if they are covering or this is a very short-term bet that VIX settles below 1960. I think more important is the time. Be aware that outside of regular trading hours, you can trade VSTOXX futures. You can also trade VIX options in futures as well. Both markets are available outside of their normal trading hours. Something to keep in mind when there's changes in volatility expectations overnight. And finally, a pretty interesting trade today during the day. Somebody bought 15,000 of the May 20 puts, sold 3,000 of the May 24 puts. The net cost for each 5-by-1 spread was 43 cents. Profits from just under 19. The worst case scenario for this trade is holding it to expiration, and expiration's right at 20. That'd be a loss of 443 a spread. But pretty interesting way that the smart bunch that are VIX traders came up with a risk-controlled method of being short VIX. This time you've got a really nice kicker if VIX moves down to the middle teens. Thanks for joining me for EQD Research Global Insights for March 16th. If you like what you heard and found it useful, please hit the like button below and don't forget to subscribe. We also welcome comments and are open to suggestions on how to make this program more useful. Feel free to put comments below, or you can always send me an email at rhodes@eqderivatives.com.